Good day. We are going to present the master budget of our business, 0 to 9. Presented here are the informations that we'll be using in the computations. For the retail information, 0 to 9 sells various products and it provided the following information to help prepare the master budget in its retail operations for its first year of operation. Letter A. The budgeted selling price per unit of each product and the monthly estimated units sold per product is shown in the table below. Estimated monthly units sold is multiplied by 3 to get the first quarter budgeted units sold. Letter B. The company anticipates a growth rate in sales of 5% per quarter. Letter C. All sales are cash receipts. Letter D. The ending inventory per product equals 20% of the following quarter's cost of sales. Letter E. 50% of purchases are paid for in the quarter of purchase and the remaining 50% in the following quarter. Letter F. The variable selling and administrative expense per unit sold is 0.50 cents. The fixed selling and administrative expense per month is shown in the table below. Letter G. Gross profit rate based on sales is 30%. And lastly, letter H. The company requires a minimum cash balance of at least $750,000 to start each quarter. Excess of the minimum cash balance required shall be deemed included in the next quarter's beginning balance. The company also have a cash balance of $250,000 at the beginning of the year. We have here first the products composed of food, supplies, accessories, toiletries, and medicine. First category is the food. We have here dry food, semi-moist food, canned food, and pet food treats. First is the dry food with a selling price of 160 and 270 as the monthly estimated number of units sold. Second, semi-moist food of 510 of its selling price and then 270 as its monthly estimated number of units sold. Third, canned food with a selling price of 95 and also 270 as the monthly estimated number of units sold. Fourth, pet food treats with 100 as the selling price and 360 as the monthly estimated number of units sold. Second category under the products is the supplies. We have here the bowls and feeders, placemats, cage and houses, and pet beds. First is the bowl and feeders, with 130 as the selling price and 60 as the monthly estimated number of units sold. Second is the placemats, with 300 as the selling price and 30 as the monthly estimated number of units sold. Third is the cage and houses, with 600 as the selling price and 12 as the monthly estimated number of units sold. Fourth is the pet beds, with 400 as the selling price and 18 as the monthly estimated number of units sold. Third category under products is the accessories. We have here the collars and leashes, clothes, carrier or travel bags, and bag toys. First is the collars and leashes with 130 as the selling price and 80 as the monthly estimated number of units sold. Second is the clothes with 200 as the selling price and 15 as the monthly estimated number of units sold. Carrier or travel bags with 650 as the selling price and 12 as the monthly estimated number of units sold. Lastly, for bag toys, we have 80 as the selling price and 140 as the estimated number of units sold. Fourth category under product is the toiletries. We have here the shampoo or soap, detergent, cleaning tools, and grooming tools. First is the shampoo or soap, with a selling price of 200 and the monthly estimated number of units sold is 270. Second is the detergent with 750 as the selling price and 50 as the monthly number of units sold. Third is the cleaning tools with 350 as the selling price and 90 as the monthly number of units sold. And lastly, the grooming tools with 310 as the selling price and 25 as the monthly number of units sold. And last category under products is the medicines. We have here the vitamins, vaccine, and deworming medicines. First is the vitamins with 420 as the selling price and 180 as the monthly number of units sold. And second is the vaccines with 1,000 as the selling price and 70 as the monthly number of units sold. And lastly, for the products, we have here the deworming medicines, which have a selling price of 180 and 90 as the number of units sold. For the monthly fixed selling and administrative expenses for retail, we have here the sales clerk, rent, utilities, assuming it is all fixed cost, and advertising or marketing. For sales clerk, we have here 13,187. For the rent, 78,000. For the utilities, we have here 7,500. And for the advertising and marketing, we have here 1,500 for a total of 100,187. For the service information, ZeroToNine offers various services and it provided the following information to help prepare the master budget in its service operation for its first year of operation. Letter A, the company anticipates a 10% growth in the number of clients served per quarter. Letter B, all revenue are received in cash. Letter C, all expenses relating to the cost of service is paid on the same quarter it was incurred. And lastly, letter D, the budgeted service fee, variable and fixed portion of the expenses relating to the services of the business is stated below. We have here 4 columns. First column is the fixed element per quarter. Second, third, and fourth are the variable element per customer served for pet grooming, pet boarding, and training. First item is the revenue with a variable portion for pet grooming, 800, 500 for pet boarding, and 500 for training. Second is the expenses composing of the materials used, employee salaries and wages, depreciation, rent, utilities, and advertising or marketing. First is the materials used with a variable portion for pet grooming of 107, 150 for pet boarding, and 75 for training. Employee salaries and wages with fixed portion of 54,900, variable portion for pet grooming of 150, 100 for pet boarding, and 150 for training. Depreciation, rent, utilities, and advertising marketing are all fixed portion. For the depreciation, we have here 1,824. For the rent, 126,000. Utilities, 7,500. And lastly, advertising or marketing, 4,500.
We will now start presenting each of the budget of 0 to 9. First is the sales budget. Presented on the screen is the sales budget for the overall year. This is in line with the assumption that sales for the first 3 months are equal and the percentage increase on sales per quarter is 5%. So to compute for the budgeted sales for the first quarter, this amount is taken by multiplying the budgeted sales for the first month by 3. And for the second quarter, it will just be simply increased by 5%, the same with the third and the fourth quarters, resulting to a budgeted sales for the year of 7,741,416. As per the per product computation, let's see the sales budget for dry food. The estimated number of units sold for the first quarter of 810 is taken from multiplying the estimated number of units sold 270 times 3. Then, each of the estimated number of units sold for the succeeding quarters are also increased by 5%. The selling price is constant, so the budgeted sales for the first quarter is 129,600, and the same method applies for the other quarters, resulting to a annual budgeted sales for dry food of 558,592. So let's just go over. Here, the amount should equal to the amount presented earlier. Next is the schedule of cash receipts, particularly for sales. This is in line with the assumption that all sales are cash sales. Let's say, for example, for the first quarter cash receipts for sales, it is equal to the budgeted sales for the first quarter. That's why, for the annual cash receipts, it's also the same with the budgeted sales for the year. As per the per product presentation, for the dry food, that as you can see for the first quarter, the budgeted sales and the cash receipts are the same. And here, this amount should also be the same with what is presented earlier.
Our next schedule in our master budget is the purchases budget. So this is our purchases budget for our retail operations. So in order to obtain our budgeted purchases for all products, we have to determine first the budgeted sales per quarter for all products. So this section here was computed earlier. From that, we can determine our cost of sales, which is 70% of our budgeted sales per quarter, since we assume that our gross profit rate on sales is 30%. We add our desired ending inventory, which is 20% of our next quarter's cost of sales. Thus, we'll get our total inventory needs. We deduct from that whatever beginning inventory we have at hand to get our budgeted purchases. For the first quarter, our budgeted sales is 1,796,100. Thus, our cost of sales is 70% of that. We add the desired ending inventory, which is 20% of our next quarter's cost of sales, to get our total inventory needs of 1,521,297. For the first quarter, we do not have a beginning inventory. Thus, it is zero because it is our first year of operation. So for the first quarter, our budgeted purchases is equal to our total inventory needs of 1,521,297. For the second, third, and fourth quarter, we follow the same process. However, it is worthy to note that the beginning inventory for the current quarter is the desired inventory, ending inventory for the previous quarter. So we just copy whatever desired ending inventory we have from the previous quarter to the beginning inventory for the second quarter or for the current quarter. So for all the products, our budgeted purchases in our retail operation is 5,724,635 pesos. So to show you our per product computation, we move to another sheet, this one. As you can see, same formula and same process will be applied. So cost of sales, add desired ending inventory to get our total inventory needs, less beginning inventory to get our budgeted purchases. So for the first quarter, our cost of sales is 90,720, which is 70% of our budgeted sales for that quarter. We add the desired ending inventory, which is 20% for the next 30% of the next quarter's cost of sales to get our total inventory needs. Zero for the first quarter beginning inventory, since this is the first year of operation. Thus our budgeted purchases for the first quarter is 109,771 for dry foods. We follow the same process for the second, third, and fourth quarter and for other products we have. So you can see these are our budgeted purchases for individual products. So to check our total budgeted purchases in our retail operation is 5,724,635, which was same with what we have computed earlier. Yes, it's the same. Now let us discuss the schedule of cash disbursement. So to determine our cash disbursement per quarter, we first plot the budgeted purchases per quarter we computed earlier. We just link that cell to this cell. Same process. Just link it. And then, for the first quarter, our cash payment is 760,648 because we assume that 50% of the purchases are paid for in the quarter of purchase, and the other 50% are paid for in the quarter following the purchase. So for the second quarter, same 50% in the quarter of purchase are collected, and another 50% of the budgeted purchases are collected in the following quarter of purchase. So we just add our total cash payments or disbursement for each quarter. For the first quarter, 760,648. For the second quarter, 1,427,316. For the third quarter, 1,366,668. And for the fourth quarter, 1,435,002 pesos. Thus, our total disbursement for all products in our retail operation is 4,989,634. We total that. Now, to show you our per product computation, we move now to another sheet again. So for the dry food, this is our total cash disbursements. Same process and same formula, 50% in the quarter of purchase and 50% in the quarter following the purchase. So this is our schedule of cash disbursement for our individual products. Now to check our total cash disbursement for all our products in our retail operation is 4,989,634, which is the same amount we have computed earlier, or same amount shown earlier. This one.
After discussing all the informations relating to the service portion of the business, let us move on to the formulation of the revenue budget. So in formulating the revenue budget, the business has assumed that the client served per month is the same or is uniform in the given quarter. So to illustrate, the pet grooming service of the business has a client served per month of 90. So the budgeted revenue for the month will be 72,000, which is computed by multiplying the client served with the service fee per client of 800. Since the client served per month is the same given the quarter, so for the first quarter, in the 3 months of the first quarter, the client served per month will be 90. So all throughout the budgeted revenue for each of the first 3 months is 72,000. So this will be the same for all the services in pet boarding and in pet training. So given this information, the budgeted revenue for each of the first 3 months for pet grooming is 72,000, while for pet boarding is 30,000, which is 60, which is the client served per month multiplied by the service fee per client of 500, while for pet training is 15,000, which is computed by multiplying 30 by the service fee of 500. Thus, the total budgeted revenue for each of the first 3 months for the service portion of the business is 117,000. So, moving on, let us proceed to the computation of the budgeted revenue for the whole year. So, for the pet grooming services, first, let us assume that just like stated in the information, the company anticipates a 10% growth in the number of clients served per quarter. So for the pet grooming, the number of clients served for the first quarter is 270, which is 90, which is the clients served per month, times 3, since there are 3 months in a quarter. So 270 times the service fee of 800. So the budgeted revenue for the first quarter is 216,000. Since there is a 10% growth in the number of clients served per quarter, so 270 times 1.10, the number of clients served for the second quarter is 297. So 297 multiplied by the service fee of 800, the budgeted revenue for the second quarter is 237,600. So for the third quarter, the number of clients served is 327, which is computed by multiplying the second quarter client serve of 297 by 1.10 or 110%. Then multiply it to 800. The budgeted revenue for the third quarter is 261,600. And for fourth quarter, the number of clients served is 360, which is 327 times 110%. And multiply it to the service fee of 800. The budgeted revenue for the fourth quarter is 288,000. So the total clients served for pet grooming for the whole year is 1,254 multiplied by the service fee of 800. The total budgeted revenue for the pet grooming service of the business is 1,003,200. So this computation will be the same for the other services of the business, for pet boarding and for pet training. So given this computations, we will now get the total budgeted revenue per quarter. So the total budgeted revenue per quarter for the first quarter is 351,000, which is computed by adding all the budgeted revenue for the first quarter from all the services. And for second quarter, the total budgeted revenue is 386,100. For third quarter is 425,100. And for the fourth quarter is 468,000, with a total budgeted revenue for the whole year of 1,630,200. So given this budgeted revenue, we can now proceed to the cash receipts budget of the business. So in formulating the cash receipts budget, the business assumed that all revenue is received in cash. So to illustrate, all revenue are cash, just like what I stated. So to illustrate, for the pet grooming, the budgeted revenue for the first quarter is 260,000, which will be received fully in the first quarter. So the total collection for the first quarter is 216,000, and for the second quarter, the total collection will be 237,600, which is the budgeted revenue. And for the third quarter, the total budgeted revenue will be 261,600, which will be collected in the third quarter. And the fourth quarter, the budgeted revenue is 288,000, which will be collected in the same quarter since all revenue are cash. So with a total cash receipts for the whole year of 1,003,200. So this schedule will be the same for all service given the computed budgeted revenue for each quarters. Thus, the total cash receipts per quarter is 351,000 for the first quarter, 386,100 for the second quarter, 425,100 for the third quarter, and 468,000 for the fourth quarter, with a total cash receipts of 1,630,200 for the whole year.
Next schedule that we will present is the expense budget for our service operation. In order to obtain the budgeted cost of service, we have to determine first the budgeted sales revenue and the number of clients served per quarter, which was presented already earlier. So to compute for the cost of service includes the fixed cost of 54,900 per quarter, add the variable cost for each services. So for the materials used, for pet grooming, 28,890, for pet boarding, 27,000, pet training, 6,750, for a total of 62,640 cost of materials used. For employee salaries and wages, for pet grooming, 40,500, pet boarding, 18,000, pet training, 13,500, for a total of 126,900. So this is computed by multiplying the number of clients served per quarter For pet grooming, 270, 180 for pet boarding, and 90 for pet training. Multiply it by the variable cost for per customer served, which is shown in the screen. So all in all, the total cost of service for the first quarter is 54,900, for pet grooming 69,390, for pet boarding 45,000, and for pet training 20,250, for a total of 189,540 cost of service for the first quarter. So computations are the same for the next quarters. For the second quarter, total of 203,004, third quarter 217,964, and for the fourth quarter 234,420. Now here is the overall computation. The business used planning budget wherein fixed and variable expenses of the whole services are separated. So for the first quarter, the materials used is 62,640 plus the employee salaries and wages of 126,900. And for the depreciation, 1,824. The total expenses for the first quarter is 191,364. Now we will less the depreciation of 1,824 to get the total cash disbursements for the first quarter. So for the computations for the next quarters are also the same. So for the second quarter, 203,004, for the third quarter, 217,964, and the fourth quarter, 234,420. So the total cash disbursements for the year is 844,928. Given this, we can now proceed to the cash disbursement budget of the business. In formulating the cash disbursement budget, the business assumed that all expenses relating to the cost of service is paid on the same quarter it was incurred. So to illustrate, for the pet grooming, we had a budgeted cost of 69,390. Therefore, the total cash disbursement and cash payment for the first quarter will be also the whole 69,390. For the second quarter, 76,329. So the total cash disbursement for the pet grooming for that quarter is 76,329. For the third quarter, the budgeted cost is 84,039. Therefore, the total cash disbursement and payment for the third quarter in pet grooming is 84,039. For the fourth quarter, 95,520. The total cash disbursement will also be 92,520. So the total cash disbursement for the year is 322,278. So the computations are the same for pet boarding and pet training. So the total disbursements per quarter, we will add the fixed cost of 54,900 per quarter. So the total disbursements for each quarter is 189,540 for the first quarter, 203,004, 217,964 for the third quarter, and 234,420 for the fourth quarter. So for the year, the total cash disbursement is 844,928 for the three services.
Let's proceed to the selling and administrative expenses budget. First is for the retail part. In the first row, the number of units sold, the first quarter's estimated number of units sold is taken by multiplying the annual sales or the annual estimated number of units sold considering all of the retail products. And for each of the succeeding quarters, it will also be increased by 5%. As per assumption, there is a variable selling and administrative rate of 0.50 cents for every unit sold. So we will just multiply that, the units sold, to get the variable selling and administrative expenses. For the first quarter, that is 3,468. Then the fixed and selling and administrative expenses are already presented in the information tab, and that will be constant to all of the quarters for the year. So for the first quarter, the total selling and administrative expenses should be 304,029. The same computation applies for the other quarters, resulting to an annual selling and administrative expenses of 1,217,192. Now for the service portion, there is no variable selling and administrative expense. That's why there's only a fixed selling and administrative portion. That is by adding the rent, utilities, and advertising or marketing. And as you can see, the amounts are also the same for each of the quarters, resulting to an annual selling and administrative expense for the service portion of 552,000.
Lastly, we will present the business cash budget and income statement for the first year of operation. The cash budget is computed as follows. Given the information earlier, the company will have a cash balance of 250,000 at the beginning of the year. We will add the cash receipts for retail, 1,796,100 for the first quarter, and for the service, 351,000 for the first quarter. We will have a total cash available for the first quarter of 2,397,100, less the cash disbursements for retail purchases 760,648, retail selling and admin expenses 304,029, cost of services 189,540, and service selling and admin expenses of 138,000. So total cash disbursement is 1,392,217. Therefore, the total cash is 1,004,803. The company requires a minimum cash balance of at least 750,000 to start each quarter. Excess of the minimum cash balance required shall be deemed included in the next quarter's beginning balance. Therefore, the 1,004,883 will be the ending cash balance for the first quarter and will be the beginning cash balance for the second quarter. So the following computations for each quarter is computed the same. For the year, the total cash receipts in retail is 7,741,416. For service, 1,630,200. The total cash available for the year is 9,371,616, less the cash disbursements in retail and services, 4,989,634 for retail purchases, 1,217,192 for retail selling and admin expenses, 844,928 for service costs, and 552,000 for service selling and admin expenses. A total cash disbursements of 7,603,753, and that will leave us an ending cash balance of 1,767,862. Now, for the income statement, in retail, total merchandise sales of 7,741,416, less the cost of sale of 5,480,991. The total gross profit for retail is 2,322,425, less the operating expenses of 1,217,192. We will have a net income in the retail operation of 1,105,233. Now, for the service, the total revenue is 1,630,200, less the cost of service of 844,928. We will have a gross profit in service operation of 785,272, less the operating expenses of 552,000. The net income for service is 233,272. Now, in all, for merchandise sales, 7,741,416 plus the service revenue of 1,630,200, the total sales and revenue is 9,371,616, less the cost of sales of 5,418,991 and 844,928. The gross profit for both retail and service for the year is 3,107,697, less the total operating expenses of 1,769,192. The total net income for the year for both retails and services is 1,338,505. That would be all. Thank you.